Our content is intended to be used and must be used for informational purposes only. It is very important to do your own research analysis before making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise. What's up, my future one percenters? This is Marathon Money, brought to you by Wincrease.com. I'm Cam Jones, the prince of the stock market, and we back with our big homie, Kenny Coins. What's good?
Money, man. That's what's good, man. Getting this money, this money. But everything look like it's going up. I'm still waiting for like the Dow and the S&P, the Dow to get to $24,100, so it can break that little resistance. So I know it's going up right now, because of that week before the New Year's, the Dow took a big, huge hit.
Yeah. Well, it took a little hit, but I think we closed the year off. It wasn't strong, but it was better.
It was better, yeah, better than the last couple months.
Right.
But the 12-17 that week, we still haven't recovered from that because that was above 24K. So to me, if it goes above that, I feel like we might be going back up. It really wouldn't be a positive thing until it breaks 26K, but it will show us a little, a little guidance of like it breaking that resistance. So that's kind of what I'm waiting for. Same thing with the S&P, same thing with the NASDAQ. Just trying to see if it's going to hit those certain numbers, and maybe the market might start treading back up.
Now, we've been gone for about 2 weeks, right? But we never came on and bragged because that last podcast before we left, you said that the Dow, we would not see any positive movement on the Dow till it got to 22,000. What happened? My boy Kenny Coins.
2019? You mean?
No, you said 22,000. The Dow would hit 22,000.
Yeah, 22,000. Yeah.
And it hit 22,000 and it popped back up. Now we are where we are. So Kenny Coins, man, pat yourself on the head, earlobe. I don't know, do something.
No, man. It there was just, to me, like there was so much going on, and things were just not going on. And the wall is starting to play effect. The government has been shut down for 14 days now. It's getting to the point where now people at airlines, the TSA lines are longer than ever because nobody's showing up to work. I just heard there was somebody on the news saying that they literally waited 6 hours in line and missed their flight, and they had to get reimbursed because people are calling out because they're not getting paid. A lot of people don't know that those TSAs are run by the government. So I don't know about y'all, if I ain't getting my $12 an hour, I ain't coming to work. You can miss me with that. So pretty much, airlines eventually gonna start taking a hit because they're gonna stop making money. So all that stuff coming into play, that's all the stuff we did not see when all that stuff was happening. Trump racked up $2 trillion in debt since he got in office. So we're actually going the opposite way than what he said. So these are the stuff that we didn't know. Those play a big, huge part in the market. And so to me, like, once I got a whiff of the wall and him shutting down the government, it it just comes down to a point where, like, look, we're in a bad spot.
Right, right. I can agree with that. But you know what, man? This is Marathon Money 100. This is the first podcast of 2019. And you know what happens on the first podcast of 2019. We give those good stock predictions, right?
Fresh,
Now,
fresh,
we
man.
do we
Stocks
already
we've been looking at.
we already said we're gonna do it a little different. We're gonna do it by quarter this year, this time, because of the little hit that we took at the end of the year last year to some of our stocks. So we need to start reevaluating every quarter. So that's what we're gonna do. So you want to start it up, Kenny? What's up?
Let's go.
All right, first.
Let's hit the first one. You know what I mean? I would like to bring back Take Two, because this
There
is
we
gonna
go.
be the first year where they do the esports, where players are starting to get paid for the NBA. So I think that's gonna be a big, huge
That's gonna be
increase in the
yeah,
in that in
big
that
revenue
stock.
boost right there.
Yeah, it's gonna be huge. This is gonna be the first year to find out if this really gonna work, if this esport thing is really gonna work. It's gonna be a mark in history. If it works, prepare the NFL gonna do it. Prepare
Yeah,
NHL gonna do it.
yeah,
You're gonna see a lot of sports doing it, and I think that plays a huge part into Cam's new idea about the
gambling.
world of gambling.
Yeah, we
And
got. That's what I'm talking. I like that, man. I like the whole gambling play right now. I really do. I think it's a futuristic play, but right now, get in low, man. It's a lot of people that's gonna be big players in that.
big, huge,
And
big,
and plus, I
huge.
like I like T2 also because they have support right here at about $100. And that's where it's at. $101.70 it closed at. This is a good time to buy.
And
Especially
then, you know what I mean? A lot of these got beat up for no reason. So you
exactly.
gotta remember that these are good opportunities to get in, even if you buy like maybe 3 or 4 shares of this company. It's a good opportunity to get in, because don't forget, just a couple weeks ago, you know what I mean, maybe like 2 months ago, it was at 140.
Right.
So we was going through that things in November and December. So you gotta think about it. A lot of these companies got hit for no reason.
No
So
reason.
I mean, you can easily make a good $200-300 off of this if you get one or maybe 2 or 3 shares
Yeah, and then
easily.
plus, man, the name of the game is always buy low, sell high. It's
Yep,
never buy high, sell
I
low.
sell low.
So
Unless you're trying to lose money on purpose,
yeah,
then
if you trying to, I can think of better things I could do than lose money like this. Wash my dishes with some dollar bills, wipe my butt with some dollar bills. You know what I'm saying? But if you want to lose your money like this, buy high, sell low. But the name of our game is buy low, sell high.
yeah, that's how we play. And I feel like a lot of these companies that we're about to bring to you, definitely for this first quarter, I think they're gonna. I honestly, just by looking at the chart and looking like where everything's projected to go, I have a feeling everything. I think Take Two is gonna hit back to 140 and maybe climb up to 170. That's some money right there. So that's where we're going with Take Two. Let's Take
Take
Two.
two. Take two. All right. Next one on the list. I'm gonna stick with you brought up the gambling. I'm gonna stick with that. Next one is SGMS. They're called Scientific Game Corporation. Now, this one's kind of beat up also. If you're looking at this chart, you might be like, man, what are you thinking? You know what I'm saying? But uh, they have support around 15. Currently, they're sitting at 19. But they're a gambling play also. So they make casino games, also lottery games. But I do think that they have potential. This is the big thing for me. I think that they have potential to get into that whole sports betting. So even things like FanDuel, DraftKings, I think these dudes might have something to do with something like that. And plus, sports betting, they're talking about legalizing that in all 50 states. Right now, it's only legalized in, I think, in Nevada, New Jersey, and I think Connecticut. One other state, one other smaller state, it's legalized in. But regardless, it's not most states. It's not legalized. Once it is legalized, which eventually it will be, you're going to see stocks like this one, other gambling stocks is going to come up. So I really like this one. Plus, it's at support, a little bit above support right now, but I really do like this company, SGMS, man, 2019.
Honestly, the top on that, I think SGMS is it. I'm gonna be honest with you. The way the thing is going with fantasy draft and all the stuff that's going on, gambling is gonna start playing a big role into those things. Honestly, I'm surprised it don't because just the way the sport world is right now. Um, you know, one of my boys made $3,000 on the college bowl games. So it's gonna come into effect. I think definitely with these esports, definitely
Right,
with
right.
FanDuel, definitely with everything going on in Las Vegas. I think this could be the company that could take off. Our goal is to, just like we did with Teladoc, our goal is to find a company like this and hope it takes off to the level that we're hoping. This company got beat up because of the market. It didn't get beat up because it was a bad company. You know
Right.
what I mean? It was,
If you look at like that whole gambling sector, most of them had that same type of chart. Um,
yeah,
so I don't know what really happened. I just know I look for some of the metrics that I like to look for in companies. They have it. They have a future, bright future, and the market cap is very low, which means that they have a lot of room to grow. So as the market cap grows, you can't grow the market cap without the stock price going up. So uh, that's the kind of stuff that I look at. You gotta have a bright future, a new way to make revenue. I think that they have it in the gambling. It's just like similar to like cannabis play, stuff like that. It really doesn't have to be legalized. You just have to be in the game. Once you announce that you a player in that, oh, it's over. So,
oh yeah,
um, so let's move on. Next one, FEYE, Fire Eye. Now, I like these dudes. They have some support right here around that $15 area. Also, market cap of 3.15 billion. Uh, they're a security internet web security firm, right, King?
yeah. They're big on cybersecurity. The reason why we put on like they do got a couple government contracts coming up. They're in the play for it. They're really good. People are putting them back into play. A lot of investors are putting big money towards them. Because everything's going on in the world now, cybersecurity is starting where leverage a big place in the world. I think when they started in 2004, they were premature to the game. I think so. I think now is the time where a lot of people will start seeing a lot of cybersecurity companies rise up, and I think FireEye might be ahead of the game. So that's the reason why we put them on there.
Yep. So FEYE. Let's move on. I want to move on to the healthcare sector because we have a few healthcare plays on here, man. But I think that healthcare, that's one of the sectors that is
Most
always
talked about.
it's most talked about, and it's always going to be there because people are always going to be sick. People are always going to get old. You know what I'm saying? It's always going to be there. Now, one of my favorites, which I used to own, I don't own anymore, but I need to get back in it, is Pfizer, PFE. Now, Pfizer does not move anywhere really, but that's why I like them. It would between all of this stuff that's happened between
They stay the same.
Between October and now, they stayed the same. They stayed around that $43 area, didn't move, and they paying a nice dividend. Oh man, I don't have it up right now. I'm tripping. Uh, I think it is 4%. Hold on, let me
Yeah,
get that.
it's 3.43%.
Okay, okay. So that's a nice dividend. If you had them during this time of volatility, I mean, you didn't have nothing. It was like nothing happened. You know what I'm saying?
Yeah, I think Advisor is like a regular pharmaceutical company. They're just very successful at what they do. The thing with Advisor, when a new drug comes out, that's when they explode. That's the honest truth, man. They
but
come up with a
but
new drug, you see them at $100.
but Pfizer is like, they've been around for so long, and
Yeah,
plus, their chart looks like really strong even in this time of whatever is going on
of
right now.
course, of course. But I'm just saying, like, Advisor's one of those companies where even though they're huge and big, but it's as simple as this, man. Is for example, in 2013, Pfizer was $17. The whole EpiPen thing and all those drugs that came up, all those stuff right there, that's what makes Pfizer where it's at today. New drug comes out, Pfizer will go up. It's that simple. Um, I think Pfizer is a solid company. Doesn't really go anywhere much. It stays between $35 and 45. Honestly, you can probably make trades with that, range bound it,
Yeah,
but
yeah.
it's a solid company. Good dividends, solid company.
Staying on the healthcare side, man, we're gonna move on to. No, I was about to move on to two ETFs we got on here, but we're gonna stick with the regular stock. BMY we have on Bristol Myers Squibb. Now they just acquired Sileg, so when a company acquires another company like that, what happens is their stock drops. So they dropped from you know I think they were like 50 something, 55, something like that, all the way down to 45. 45 is where they have support at. So right now, as of this recording, they are at 46.89. And I think that's a very good deal on Bristol Myers, which is BMNY. Let me get their dividend up real quick because they do pay one. I'm reading 3.5, but either way, pretty good, pretty good. Hopefully it's 3.63, but but Bristol Myers, with that acquisition they just made, stock drop, buy low, sell high. This is a good time. It's right here at support, strong support here at 45. I don't think you can go wrong. I'm about to grab. Moving on to, we're gonna stay in healthcare. XLV, that is a another
ETF.
healthcare ETF. It's one of the more safer ETFs. Um, they have some support at about 80 right now, sitting at 85. But once again, man, you can't go wrong. We don't safe plays. You can't go wrong with healthcare. And plus, this is a nice ETF. Even with everything that was going on with the volatility in the past few months, they moved, but it was like they went down about $10 from 95 to down here to about 85. So compared to some of the other stuff, like Square went from 90 to 50, Teladoc 80 to 40 something. This didn't move anything. So I think it's pretty safe, and I think they pay a dividend also. I'm tripping, man. I don't have this stuff up. Um, their dividend is terrible, 1.58%, but it's still a good stock though.
I think the next healthcare stock is Cure.
Sure. Yeah, that's the next one
Uh,
that's on the
that
list.
that one is the one where you can make a lot of money You also can lose a lot of money. This is a risky play. But just to prove my point, just you can make a lot of money. Is on Friday it was 8.8% move.
8.8.
You know what I mean? That's a $3 move right there. $3.79 move. You know, I mean, it's a 3 times bull stock. So everything's gonna happen is gonna move 3 times
Yeah.
more than the average market. So it to me, healthcare is a good play, and you know what I mean. Just because of what happened in the last couple months, it got beat up. I think this is a good opportunity. If you pick it up at 46, you probably get somewhere over 70. I think there's a lot of money to be made in this stock.
Yeah, and support is here. Support is really nice at $40. I mean, it
Yeah,
dipped a little bit below that, like 39 something a couple weeks ago. I was an idiot, didn't buy any. I was buying at or like 45s and stuff, and then when it really started to dip, like I think it was before Christmas. I was like, let me hold off. I should have bought some more, but I didn't.
yeah. I'm gonna keep looking at it, get into it myself. I'm just letting you guys know it is a risky play. Just the gains on the upside is 8%, and the downside it'll be the same thing if it went down.
Right.
You know what I mean? So that's something you need to be aware of. It is a portfolio mover, man. You know what I mean? It is a portfolio mover. Like just in a month time, it went down almost $30.
Yeah.
So
yeah.
that's that's huge, man. That's that's a lot of money to go down. But that's one of the plays that we've had that risk alert on there.
Yeah.
So
let's move on to JD. Now, JD, I like JD, even though I've been in JD for a little while. I think since like last winter time. I actually bought in high though. I was in at like 40, but I like JD around here at this level. It's another one that's beat up. Support is right here at about $20. Currently, it's sitting at $20.27. Would you say that they're similar to Amazon?
it's hard to say that because JD also has competition with Alibaba. They're just not doing as well as Amazon and Alibaba. I personally think because they're still a Chinese stock. You know what I mean? I feel like JD is like the Walmart. But at the same time, they're still a good company. I never bought anything from JD. I bought stuff from Alibaba.
Right.
And I can tell you Alibaba takes forever, but I never buy anything from JD, so I wouldn't really know. I just looked at the chart, and the chart was really good. The company's solid. And then I bought a couple shares, you know what I mean? Like I told you on Thursday at like 21, I think maybe 22. I'm not sure where I bought it at, but I personally think it's a good company. I think it has some serious growth to go. I think it has a potential to get back to where it was. So I think the only reason why it's down is because of all that trade talk and all the
once that smoke gets settled, you're gonna see a lot of these things come back up, like JD, Alibaba, Baidu, stuff like that.
Yeah, even Amazon is gonna fly back up. Right. You know what I mean? All those companies are gonna fly back up when everything gets settled. So I just never, honestly, that's why I'm gonna be honest. I'm gonna keep it real with you. I just never bought anything from, JD. It did get a 10% move on Friday, so.
Right.
You know what I mean? So, who knows?
Let's move on. We've got two more. I'm gonna say my favorite one for the last one. And Kenny already know what that is, but the next one is Glue, GLUU. Now I know that if Extro is listening to this, he probably laughing right now because he knows the story of me and Glue. I was in Glue. Just to give you a small backstory, I was in Glue like 2011, 2012, something like that, and it was like $3, $4, something. And this is when I was playing that online gambling stuff again. You know what I'm saying? Because I thought that they were gonna get into that space, and they just didn't. Them Zynga, they didn't do it. Now they made me so mad because I lost so much money on them, and then emotion took over. I just never wanted to look at them again. But I took another hard look, man, and I think that they are. They fired their CEO. They're doing some things different. I like Glue. I do. I like Glue.
Here's the thing. Here's the thing with Glue. They're for the longest time their claim to fame. Between 2014, when went from $1 to $7 in 2014, and then they went in 2011. They went from $1 to $5. Their biggest claim to fame was Kim Kardashian.
Yeah.
That mobile app. And I'm gonna be honest with you. I'm surprised that app made so much money to the point where it affect Glue stock that much. So to me is that's a big gain. The only thing, my issue with Glue, if they got like with this new CEO, new staff, they got to change some ways. They got to get into different stuff. I think Glue has the money to do it. I just don't think they're willing to spend.
Now, I feel like Glue more than I feel like Glue's upside is basically a takeover target.
Yeah.
I think that if you wanted to monetize in games, easy. I think that this is a good company to do it instead of like maybe trying to start your own. Like, let's say and I don't know this. I'm just throwing out names. Let's just say like somebody like Apple. If they want to drop their foot in the mobile games, you could do that easily. They're just a $1 billion company. Even though if it was somebody like Apple, I would assume they would buy someone like a Take-Two or EA, preferably EA. But
EA needs some help, man. EA just need to be renewed, bro.
Right,
renovation. EA need a whole bunch of stuff. I personally think EA is still living in the glory days between 2001 and 2008. I really think so, man, where their basketball games were decent, where their football games were decent. And, I think they're living in those glory days where like me, myself, was playing NHL. I think EA spending all their time living there and instead of actually improving, because I'm going to be honest with you, 2K only got basketball. How they beating y'all guys that bad? That's all they got.
Well, no, they got Red Dead Redemption.
Yeah.
They got Grand Theft Auto. They got Grand Theft Auto.
Yup, I'm not gonna lie. Grand Theft Auto makes them a lot of money, but EA should have them beat in sports, man.
They should.
You can't have your logo EA in the game, and you like. You're trash. Like, it makes no sense. That slogan goes too hard for you to. It goes too hard for you to say that. It's too strong of a slogan. You know what I mean? It is really too strong of a slogan for you to be trash. I feel like the last 10, 12 years, EA Sports has been good. I think it just needs to be taken over. You know what I mean? Apple, that'll be a big move for Apple, man. That'll be another takeover for them if they did something like that. I don't know what kind of games they would make, but I know if they can fix Madden, oh man, it will take over.
So, we pushing up on that 30-minute mark. So let's get to our last one, which is Keys. Keys.
This one's a good one.
I like Keys. This is my favorite one. Kenny was hit me to this, so man, you might want to explain it.
So basically, Keys Technology. So they're in a collab with Verizon and two other companies for the 5G development, which is coming out in 2019. Um, this is gonna be for the iPhones and the Samsungs. Maybe like two other phone companies too.
But eventually,
Um,
5G is going to be like 4G. It's going to be standard.
yeah, it's gonna be standard like 4G. So key technology is like the forefront. So pretty much they're gonna be the main manufacturer where everybody has to go to get the 5Gs and some of the parts for that. Honestly, to tell you the truth, it is pretty expensive. I'm gonna be honest, we're all like, I don't know if we're late to the game. I wouldn't really say that just by looking at the chart, but 5G is coming and they're the main manufacturer. So to tell you the truth, if 5G is accepted well into the market, don't be surprised if this stock is at $100.
Right,
Um,
right.
because like that's where it's headed to, and it's not a volatile stock. You know what I mean? And that's why I'm gonna be honest with you. It's not a volatile stock. It slowly graduates up. It's stable. It makes their money and live to see another day. That's how I call it. These are one of those good stocks. $11 billion market cap. They're not that high. They got exuberant amount of room to grow. You know, so I think a lot of it. I think a lot of this. A lot of it has to do with the fact that key technology is still a really undervalued stock. I think they're like a teledoc in my opinion. 5Gs is huge. Definitely for the next 5 years on the level speed of internet that we might come into. So if they're the main manufacturer, we're going to see some big moves in the next year,
Right.
or maybe in the next 2 years. I'm hoping we might see 100, 120. That's my goal. If I can see 120, whew, money. So, but just take a look at the market cap. Take a look at some of their stuff. They're not in debt. This is a huge contract. Definitely with Verizon, AT&T, T-Mobile. This is big for them. So, they're the main one. So I'm hoping that this reflects on their stock. So there's money to be made here. So key site technologies, man. KEYS. I think that's our next big play. So we'll keep you guys up to date on that one.
And that's it for the Marathon Money 2019 joint. You know what I'm saying? So next time we would do this, we will reevaluate these. Is going to be in 3 months, which I would like for us to do it every time. The big tech earnings start coming out, which they're about to come out now.
Honestly, I think when earnings come out, what I mean, which is pretty much every quarter, after every quarter. So I think that's when we're gonna make those changes. Keep the ones that are doing good,
Sell the
and
ones
then
that we think aren't.
yeah, what I mean, if they don't, if take because a lot of things we learned from the past is that some of them was like 7-8%, and then we should have just took that profit and went with it. And then so a lot of these things we could have took profit and then kept that portfolio even more stronger than we ended last year.
Yeah.
So different strategy, different game, different year.
Yep. So that's it for Marathon Money 100, man. If you can follow me on Twitter, Instagram, whatever at Camboni11, CAMBONI11. Where can they find you, Kenny?
Kenny Collin 23. That's all over the place. Twitter, Instagram. I'm not really on Stock Twitch no more, so I stopped arguing with people. That's pretty much what Stock Twitch is all about. But the message board, I pay attention to that. So listen to our podcast, follow us on Marathon Money on Facebook. We're trying to grow it, so
shout out to everybody in our Facebook chat, man. What's up? Going strong, getting that Marathon Money. Say what's up, my boy Lou Digi.
Yep, staying in that money.
All right, man.
Peace.
Next week. Peace.